James von Moltke, CFO of Deutsche Bank. Welcome to Bloomberg. No share buyback, that will disappoint, but you say that you have initiated dialogue. Define initiated dialogue. What does it mean for a payout on the buyback?
Well, let me take you back to February 2nd, where we announced a decision not to pursue a repurchase in the early part of the year. We think that was the right decision and prudent, given that we were cautious about the outlook for 23, and we had some model changes that were coming. If I fast forward to today, what has changed? We think the outlook is a little bit more clear. We've gone through some turbulence, but we can see the way forward. Our step off from a capital ratio is better than we'd anticipated, and I think we have more visibility into the model outcomes that are coming down the pike. So to your point, we now have the confidence to move forward as a management team. We've engaged in a dialogue with our supervisors and intend to move forward in the second half of the year with a buyback.
Well, will you move forward with pace? Will it be in the third quarter? I mean, Credit Suisse imploded. UBS is on a technical pause. Do you just have cover to be cautious?
Well, as I say, I think we made the right decisions at the time. Yes, we're not going to be sort of definitive about timing and amount, but our goal is to frankly execute on the capital plan that we shared with investors last March, and do so as quickly as possible and as prudently as possible.
You've upped the cost cuts from 2 to 2.5. How fast will they be delivered, and where? And what does it mean for jobs?
Look, we're working on this right away. Today we're announcing a reduction in force in our senior management layers. We're announcing a streamlining of our mortgage platform. We're taking some management changes, some actions in our management, also to concentrate the ownership, if you like, of the cost base. Essentially moving forward on executing the plans we have and going further into the cost base. We'd started to talk about that again in February. What you see here is a management team that will always work on the cost base to deliver better outcomes for shareholders where we can.
March will be etched on our mind as a month in which volatility in banking was really quite frightening. Credit Suisse imploded. You've upped your liquidity buffers. What is the biggest consequence of Credit Suisse and the attack on your stock? Do you need to build now consistently on the liquidity buffer as a result of that one day and that one attack?
I think we need to communicate more clearly what the liquidity buffers mean. Because I think the market doesn't understand just how conservatively capitalized and how liquid the banks are, especially the globally systemically important banks are. So let me talk about Deutsche Bank for a second. Our capital and liquidity ratios improved during the quarter, which I think speaks to the resilience, the stability of our balance sheet, and the tools we've built to manage these things over the years. But to your point, I don't think that there are actually changes needed in the regime that we operate within. I think what we need to do is help our counterparties and our clients and the public at large understand just how conservative the stress scenarios are that we manage the balance sheet to.
Switzerland has a mega bank. Credit Suisse, UBS. Does Germany need a mega bank?
Germany has a leading, globally systemically important bank with a set of capabilities that are unique to our market and that we think we can execute as a strategy supporting our economy.
But will there be more pressure on you now to look for a deal to grow in size, or will you not be hurried or harried?
I would say we won't be hurried or harried. I do think there are benefits of scale in our business, and I think we've been consistent about that feature of our strategic landscape. But we've also been consistent about talking our strategy, our execution, and really making Deutsche Bank the best it can be, which I think also prepares it to be a participant in consolidation over time.
That week, 2 weeks of sheer angst around Credit Suisse saw major movements of deposits and assets around the banking system. Your deposits dropped in the quarter. I need to understand, was there an exodus of deposits around the Credit Suisse time, or was it flicking into money market funds? Define the deposit scenario at Deutsche.
Well, it's interesting. There were a lot of movements going on during the quarter in deposits, much of which we see as a normalization of deposit balances in the industry relative to high balances at the end of last year. The central banks are draining liquidity from the market. Interest rates are moving, making alternative investments more valuable than deposits. And so there's a lot going on. We had a 4% reduction in deposits during the quarter from a relatively high level, frankly in line with the market as we see it so far.